All right, so hello guys, and glad to have you on board again today. You know what time it is, so let's do the regular updates of our flow trading. So when it comes to the S&P 500, this one will be passed over pretty quickly because that's pretty much the same story as it was last week, meaning that since then the only thing that we've achieved is just pushing further down the line, pushing and pressuring the bears even more. But despite the psychological effects that we have here, just basically plainly just going very quickly from context to context, shifting sentiment dramatically, V-shape reverse, and all the things that we mentioned before, meaning that the bears had no chance to get out. They've been V-reversed, they've been locked in the market and stopped very violently. Also meaning that if you were a bear, meaning your stop losses should have been somewhere around like 43.55 up to 44.100, and in the best case scenario, meaning you sold right at the top, but your stops nevertheless had to be at break even. So there's just no way to jiggle around this question. If you were a bear selling this leg, there's no way you could have ended up anywhere else, but either you took profits in the bottom for whatever reason, or you've been stopped already. Okay, so if you still hold bearish position into this third flow, that means whatever you're doing isn't part of the strategy. Okay, so I just really wanted to state that one very, very clearly. You've been stopped out, it's going to happen, and it's still going to happen a lot in the future as well. So just get along with it. Try to stop thinking about one single trade and just try to see it as a statistical, as just one random variable in a long series of statistics. Okay, if you take 100 flow trades, there's obviously going to be some break-even trades. Some might actually have delivered quite some profits before they end up being stopped at break-even, and yet when they happen, these ones can be very psychologically impactful. That means, well, you would say, Jesus, I had a gain and I just lost it all entirely. The fuck is that strategy? Well, that strategy says out of 100 trades, you're going to make some money. You're certainly not going to be a billionaire. You're just going to make a bit of money out of the risk you took. But this is very low risk, low reward type strategy. But it certainly can't lose money. It's not possible. Okay, I tried it so many times around. If you can figure out a suite of 100 flow trades which don't provide a positive outcome, I'm very curious to see that one. Okay, just really, if you can find that one out, really send it to me, because that's really something I hardly think is even possible. Could be, okay, but that's really a statistical, very low probability occurrence. Still, anyway, that aside, so that's the message. For the S&P 500, if you were a bear on these legs, you need to be out. There's no way you can say, no, my stop losses should be... No, remember, you broke the previous lows, you had to be at break-even, period. For the bulls, there's no way you could have caught that low, frankly. This third bullish flow that we've mentioned, the bullish entries were right there. That means, on my personal end, I traded there and there, which means when we got there, I just decided, okay, you know what, I'm taking my profit out of this moving average and I'm trying to go down further. But we've mentioned that it is just a personal assumption. And the reason why I'm doing it is because I also have a bullish portfolio on the low risk time frame. So I stated that very clearly. That's a personal management choice, okay? Money management choice on a portfolio level. It's definitely nothing related to flow trading. In terms of pure flow trading application, okay, these trades haven't been stopped out. Just let them live. Okay, that's really the way to go. We stated that the third flow, if it ever had to happen, just can't go anywhere lower than that. So we didn't go anywhere lower than that. We've really gone close, frankly, but didn't stop it out. So that's really the way to go. The third flow has its possibility to play out. Well, out of this then the actual technical entries for this to happen, sorry about that, okay, were there. So either you're still into this trade, they haven't been stopped out yet, and the only thing the strategy tells you is that they shouldn't be traded anyway or moved anyway until you get to 4,600. If we get straight line to 4,600, well, this is how and when you can put those trades at break even. But until then, well, just live it up with uncertainty. You don't have any reason to change anything to these trades, okay? So that's frankly all I have to say this week around. If you were a bear, you probably have been trapped and there's no way around hiding. The only thing you can do now out of this is to let the market build a 2 sets of consecutive flows. Okay, the first one would be this one. You need to let the market enter some sort of correction or whatever, and you're going to have a second flow. And after this second flow, you're going to have to wait for a first bearish one, okay? And then you have to wait for a correction, and you're going to trade the second bearish flow, pretty much like this one. Remember, that's the same story. You're going to trade at the moving average or the Bollinger Band. But that's the next bear trade now. For all the other bears, okay, you probably have been stopped somewhere in here. Oh, your trades were probably there and they've been stopped. So the next trade for you is probably not going to happen until early 2024. So I'd like to state that one very, very clearly, okay? So if you were on the bear camp, solely on the bear camp, even though I clearly stated, I think if you play the bear camp, you'd rather like to play both the bear and the bull because the low risk strategies are to the upside. If you trade only the bull, well, you probably had some troubles navigating this because, frankly, this wasn't easy. That's really the way I would say it. Nonetheless, both these strategies were probable and possible. And the best case scenario is to actually play both. That's what I tried to, but like I said, I missed the bear trade for just a few points, a few ticks. So that's really the way to go. But for the bears now, really saying it again, there's no way you can trade but to let some time pass now, okay? Don't fight against this thing because it's gone too high too soon or whatever else reason. Remember, anytime you try to time the market in a flow sequence means you're falling for the noob biases. Don't ever do that again. Just have that mindset all the time. When you think something's going too fast or not fast enough, this is new bias at play. That means you're trying to time this market where you shouldn't, all right? So that's for the S&P 500. Very tricky, and we've mentioned last week, it was tricky as well, and it's not getting easier, okay? We're really navigating in this shaded territory, and frankly, well, I'd like to assess the reality. It isn't easy, and well, there's no way you can make it any easier, so just embrace that chaos. The reason why, if I had to give you at least something, okay, though remember, this is generally stupid to try making sense of flow trading, but in here, I would like to state the obvious because, well, this is really the reason why this thing is going absolute bunker chaotic. Is the same old ratio RSP to RSPX, meaning that, well, this violent V shape is just once again a very limited set of assets, crazy gains and stuff like that. So it's still heavily concentrated in the top few names. So that's still very, very tricky to navigate. That means, well, the S&P we see today is really not very appropriately weighted, which means it can violently react by just a few names. And that's exactly, once again, what happened there. So until we get to really, really get along with that, that means either having some broader participation in the market, I am not necessarily confident into following this third flow with the flow trading, just because I do follow it with the rest of the portfolio. And I really want to state that one clearly, not to be misunderstood, okay? If I didn't have a bullish portfolio on the lowest time frame, I would never, ever be anything but bullish on this market, okay? That's really the way to go. But if you're a bull, you really want to go all-time, not all-time high, but you want to go 4,600 now, okay? That means this is the only area in which you have something to do with your flow trade, and that's not, yeah, I'm the best in the world. It's just putting your stop at break even and let it live. And if it goes back there, then you're out. That's really the way to go, okay? Same story as always. Remember that when it comes to this, if we go all-time high, on the H1 time frame reference, you're going to have to be a bull until you get a third range boundary. When you get that third range boundary, take the fucking profits out and move on to something else, okay? Once you succeed on a trade, move on to the next one. Once you get stopped on a trade, move on to the next one. And that's really the way to go, okay? And if you get to have a nice profit and ends up with a break-even stop, well, move on to the next trade. That's really the way to go, okay? I hope someday you get familiar with it. The strategy is pretty damn simple. It's just that the only downfall for this is generally your psychology. So try to work around that. That's how you'll get a more profitable trader over time. All right, when it comes to crypto, Bitcoin, same story out there. we have that nice third flow and it's just driving people crazy. Remember, once again, everybody was bearing here. I just didn't really know anything. It was just, yeah, I trade what I see, and what I see just tells me buy the fuck out of this market there. This is the bearish Bollinger Band, and this is the perfect entry point for a third flow. So take it and leave it to the stupid to the stupid analysts or whatever. Just do whatever they think back then to say this should go there or whatever. Okay, just follow the goddamn simple rules and try to consistently apply them. So it triggered, violently or not. Some people then say, yeah, it's going too high, too quick, to whatever, it's going to crash. Yeah, okay, so you know a few things now. The maturity of that stage means we've broken previous high points. Anything you bought out there is stop at break even, okay? So that means if this thing ever goes there, everybody's going to get stopped out. So I see some people betting on this, like, yeah, we're back down 22K or whatever. Yeah, possible. And once again, everything's always possible. You know what's going to happen. Of course, you're going to get the hell out of this trade and you're going to be stopped at break even. And if it happens, oh, you're going to lose all your gains. How painful that could be. Well, just try to make it easy on you guys. It's going to happen. Sooner or later, in a distant future or not so distant future, you're going to make some nice gains and you're going to lose them all. Okay? Like, for example, any guy who were bearish on the S&P 500 and who traded that third bearish flow, that's exactly what happened to them. They've been stopped out at break even. They had a nice gain. Yeah, the market was going to end of the world and stuff like that. Though first and foremost, it was against the major trend. So that's one thing to assess, okay? Most of the time, when you're going to get violently rejected by the market like that, mean a nice gain, validated, confirmed, and then, boom, it entirely disappears and vanishes. It may happen, and it will happen, in both bull and bear directions. But there's one thing I can tell you for sure, because I've studied those statistics over 10 years of doing these things, okay? That's really the way to go. It will happen more frequently when you are against the low risk strategy trend. Okay, that's really the way to go. So the trend on Bitcoin is bullish. So the probability to see this thing going there, okay, it's non-zero. But out of all the possibilities in which you will get wrong-footed by the markets, it's certainly not 50-50 up to downside. It's really, really asymmetrically shifted according to the low risk strategy direction. Okay, the low risk strategy on Bitcoin has always been this weekly to monthly bottom area, oversold cluster, stuff like that we've traded last year. So we're getting out of this to the upside, and therefore the probability for this thing to violently reverse and vanish all your beautiful gains is possible, but not so likely as you would think it is. Okay, the most likely probability in these trend sides is, of course, that follow the goddamn strategy. Okay, and the strategy tells you one thing. Okay, the third flow is going to give you a third range boundary. That's where you take profits. Okay, that's not a guarantee, but that just says there's a very less likely probability for this thing to V-shape reverse and go back down to your entry price. Can, but normally it will pull out the third range boundary. Pay attention, this one could be a delayed one, but there's also one very important detail, I guess, that many people didn't really figure out, but this wasn't random, okay? Remember that out of these three sets of sequences, okay, if you look at it, there are multiple metrics. The first ones are the context being outside of the average, okay? And as you can see, the first flow has to pull that one out. The second flow has to pull that one out as well, but not so many people have actually figured out that for the third flow, it isn't mentioned anywhere. Do you see this arrow on the third flow? No, that means the third flow doesn't necessarily have to pull out the context above the rising moving average, okay? So that's really critically important to me. The third flow doesn't have to be violent and long and painful for the opponents. It just means, well, it can happen, just like if you look at it here, it does happen. Now that's really, really important to say. This third flow that we have is kind of pretty damn mature. It succeeded into breaking the context above the rising moving average. And that could be a sign of advanced maturity for this flow. Or at least this wasn't a mandatory signal to get, and still you get it. So I would tend to say in this kind of appropriate context, if you look at it, you're having squeezes and stuff like that. If you just can't stand the psychological pressure to say, yeah, I mean, this thing could reverse, I just can't wait for the third range boundary. Well, if you want to take some partial profit taking, I would tend to say this is the kind of signals that you can use. On the third flow, you're getting some sign that we're really moving forward with this flow sequence. We're at the end. That's the third and final floor. Remember, this one is once this one terminates, and you don't know when it does, but you're going to have to wait for a third range boundary. That means for now, at least going back down to 32K, which would be a bare minimum to get a delayed third range boundary, and then you get to wait, okay, until this thing rebounces, and this is where you get out, okay? So that's the thing you should be into now. But if you really can't stand that probability, okay, you really, really want to eventually take some profits out of there. You've got advanced maturity, but when I take profit, I'm saying take partial profit. The best you can take out of this is a third of your existing position. If you start to limit your gains in trading, that's not the way to go, okay? But in here, you have a clear evidence that you're actually getting maturity stages that are not even required by the strategy. So this third flow is really putting a lot of strain on the bears. But is that a reason to change your strategy? No, I wouldn't say no. So the thing is, partial profit taking, because of this, I would say is doable, but certainly not taking it all out just because you fear of losing it all. Normally, you're going to get that third range boundary, which is going to give you plenty of time to take your profits afterwards, okay? But most importantly, this thing can keep going on for long. Remember, the third flow in here could just ride its way up for more than you could settle. And there's no thing in the strategy that says, well, when you do this, that means the maturity is too advanced, take your profits out. No, it's not part of the strategy. What I'm saying in here is that this advanced maturity isn't mandatory. So that's the sign that this third flow is really lasting longer than expected. But does that mean you need to take your profits out of this? The answer is no. If you can't stand it, I would say, yeah, partial profit taking can be done, but certainly nothing else. All right? Though that's today's lesson, okay? If you figure that one out, I'll try to put it simple on you guys. If you want to take early profits, okay? Because, wow, I just fear too much of a V-shaped reverse. The only way you can do it is by waiting to get at least the moving average crossing over the rising context, okay? Or the context crossing over the rising moving average, okay? When this happens, that means at least your flow has matured enough for you to say, if I can stand that, well, I want to take some partial profits, you can do it, okay? But always remember, nothing more than 25 to 50% in the worst case scenario. Don't take anything more than 50% of these profits in this stage. Always wait for the flow to have confirmed. That means I want to see I want to see the context, god damn it, crossing above the rising moving average, all right? And the same thing goes for the opposite direction. Like if we were to take the S&P 500 in the reverse direction, okay, I'm going to take these kinds of wrong footing trades as a good example, okay? And remember, today's second lesson is this will happen, certainly will, okay? But it will rarely happen, or less probably happen in the direction of the actual low risk strategy, okay? So try to be more confident. When you're in the side of the low risk, just don't fear too much of these V reverse. They will eventually happen, but not so likely. Though, let's look at here, okay? When did we see the context falling below the moving average? Well, this is here. So if you wanted to early profit take on these trades, this is where you would have done it. Exactly there, okay? This is where you could have been able to eventually take 25, 30, maximum 50% of your bear trades. Okay, so I've seen some people looking for answers to this thing. Like I've said, these V-shaped reverse can hardly be predicted. But if there's one way you can alter the rules, okay, that's for the third flow particularly, because this is where the V-shape generally tend to happen, okay, on third flows. And this is not a mandatory rule of the strategy, just giving you something in here. If you fear for those V-shapes, okay, out of 10 years experience, here's what I have in statistically relevant stuff to make out of these things. It generally happens on the third flows, okay? If you want to early profit take, at least wait for these goddamn moving averages to be crossed by the context. When they do cross over, this is where you can start taking some partial profit takings, okay? So if you fear now, and if you figured out what I said here, it's just basically Bitcoin is here today. If you fear Bitcoin to V-shape reverse and take it all out from the bulls, well, starting now is where you can start to profit take, okay? Now you have reasonable evidence that this stage of maturity has been reached to start profit taking partially. But once again, the difference between these two assets is that the S&P 500's low risk strategy is to the upside, and we got a V-shaped reverse to the upside. When it comes to Bitcoin, I doubt we'll get a V-shaped reverse to the downside. Okay? So now you have everything I wanted to share with you today. These two informations. If you really fear so much about V-shape, here is how they tend to occur the most. That doesn't mean you won't be V-shaped out of a second flow or whatever. It may happen as well, but this is chaos. That means you're just going to have to take it. It's going to happen. But if there is ever one thing I can teach you today about how you can actually be proactive with those possibilities of V-shape, this is the only thing I figured out over the years of experience. Okay? So do whatever it is that you want with that. It's not an hard-coded strategic part of the equation. Okay? All you need to know is in that flow sequence. But if there's one thing I can give you to get better at it, that's one thing that I have studied over time, and really that thing can be efficient. So be cautious with those third flow. Okay? When they overextend like that, if you want to early take your profits, okay, but wait for the moving average to be crossed by the context. That being said, I'm going to leave you guys with that today, and see you next week. Bye-bye.